All right, so these are NASDAQ sales actually took today. But you're looking right at some buys. So let's keep it simple. I did try to buy this, but immediately recognized I was wrong. Now, what is the logic? What am I? I'm always thinking through what is the average person thinking? Okay, so one, again, 9:30 open price drop lower. So the average person just chases lower. Then the markets, what they do? They run price higher. Now, the average retailer is like, okay, you know what? Maybe we want to go for buys. They want to get into buys. And guess what? I actually joined that crowd for a second, ignoring the fact that, now this is why I shouldn't have done. One, running higher. Now I'm chasing highs. We're also running into a fair value gap. Price has not proven that it wants to go above it yet. There's no reason to get in this buys. That's a resistance level. I should not be buying there. And also, we're in this inversion 15-minute fair value gap here. So, there's a lot of reasons why I shouldn't even be in the buys to begin with. Okay. So, I'm showing this here, kind of digging into some buys initially. Because, again, when you see price move so quick, if you're not careful, you can get caught up in trying to chase that buy. But again, there's no reason to get those buys because of this 5-minute fair value gap here that's in the way. And also the fact that we traded below this 15-minute fair value gap, right? We trade all the way back in. We trade through it again. Previously, this 15-minute fair value gap, if you go all the way to the 3 chart, supported price higher. So now, when it goes below it, we want to see uses that as a resistance. So go all the way below it. Yes, uses it here as resistance, and then drops into another 15-minute fair value gap. These 2 lines here, and pushes higher. So now it's a ping pong match really being played between these 2 levels. Okay. So, anyways, drop lower, retail chases lower. Then they disappoint them by going higher, knocking out their stop losses. Now they want to chase it higher. All right. But we're going to go short here. You're going to see me get out of the trade immediately. I say, you know, I got out of the trade and immediately went short. Why? We trained this again, level here, 5-minute fair value gap. And we then create what I initially thought was an order block, or looked at as order block right here. Because again, this candle overlaps this candle here, and we go through its opening price. This black candle here opened up here and went higher. This candle traded below that. So at this point, I'm expecting that to act as a potential order block and to potentially drop price. So that's why I'm in those sales to begin with. See price moving around, gyrating, and I put my stop loss above here. Reason being, we're gonna also look into the details. So as much as this is a 5-minute fair value gap, we're gonna look at a 1-hour chart. You notice the 1-hour chart also is showing this as the fair value gap. So now we're in a higher time frame level based off of intraday trading. 1 hour is a very strong level. You know, you might want to look at it as like a daily level. Mentally, I look at the 1-hour chart as a daily level. That kind of gives me the mindset to trust and believe that those levels are going to be significant in what price does or how price responds to it. So again, we're at 15-minute inversion fair value gap, but also we will notice also 1-hour fair value gap. Let's keep watching this stuff here. At this point, price pierces these highs one more time. So again, notice here, this is the 1-hour chart to the left. At this point, I'm expecting price all the way down here, actually. I don't know if I zoomed in, but you can see this 1-hour fair value gap right here. So price is respecting that. That's where price is trading into. So I added 5 more positions. Why? So now I was in 5 contracts. I added 5 more, so I'm in 10 contracts. Why is that? Because the trade pierced above the side. We start breaking down. Okay. And then on the lower time frame, it was on the second chart. I also saw something as well there. I'm not going to get into the details here on this one, unfortunately, but I'm looking at those lower time frame charts every single day. So at this point, look at this. We trade above these highs. That's all we need to do. We don't have to trade above these ones. And then one thing I like to call out too, understand another reason why these buys I'm taking to begin with, the S&P 500 actually ran above its intraday highs. So this move you see here on NASDAQ that went higher, S&P actually went all the way higher to take out its intraday highs. NASDAQ not. So again, what do I say? Anytime there's something of that nature, we can expect an opposite effect to take place in price. Meaning if one goes higher to taking out its current intraday highs and one fails, we can then potentially expect a retracement. Aggressive retracement or a full-on reversal. So as NASDAQ went here and stalled in the 1 hour fair value gap, meanwhile S&P kept going higher. That validates the fact that this is likely just a retracement, likely around liquidity, and the price is being stalled here at a level that's on a high time frame. Look at this right here. 1 hour fair value gap right here. Price is being stalled there. So I can then expect this to actually show a potential to reject price. Then the one thing I'm also looking at is we have this wick here. Again, the average retailer is thinking this wick is likely to be a doji. And it's going to support price, and price just keep going higher from here. You have to also consider, again, we have this fair value gap here in 1 hour. Every single PD array or levels we watch as a smart money trader, we have to pay attention to those levels. This is a 1 hour fair value gap. Price trading is that. I can't just ignore it. It's there. And we traded beyond all of this consolidation here. So price level is going to find it easy to just keep going higher. So you got to look at what's happening here structurally. Drop here, consolidate. Drop again. Now, price changes this fair value gap. Right? Yes, this drops price initially, but again, it's still there. You cannot just ignore it when it starts retracing. So, anyways, see trades into there, respecting it. And at this point, you can add in another position right there. Right there. We could add in a position right here. Why? If you look very close to the left, this is a 1 minute fair value gap. Price overlaps that, creates another fair value gap here. You can enter there, and also right at a new day opening gap below, which is pretty much a 9:30 opening price. Opening prices are sensitive as well. So price is trading to those levels. Let's just say rejects and trades to it. You can consider that another area where we potentially add shorts. So got price just moves. We're in 10 contracts. Beautiful. I reduce my risk right here. Trust that price is likely to drop. Ready trade away from the new day opening gap low. Done damage up here. Prices drop lower. There's a liquidity pool resting there. Easy money. Again, our up close candles in this run. Look at how these up close candles are supporting price. So these up close candles, series of up close candles. Price trades below that. Trades into these up close candles. We drop. Price trades higher into these up close candles again. We drop. Now price trades again back to this up close candle. We drop. So price is showing it wants to respect up close candles. And every fair value gap, like to the left, look at how this gets violated. This one to the left, price runs right through that. I want to say it kind of trades back into there, or maybe falls short. You can sell here as well. This fair value gap here again. Price trades right through that. Trade here, fair value gap, enter there again. And you can see price runs below its levels. See here, I said took a small portion off. So before around these lows, I took something off just because I saw S&P was ahead of the game. And that makes me a little bit uncomfortable because, again, what do I say? Whenever one does something, the other doesn't, it could lead to a retracement. So I just took something off initially. But then it's still around these lows, which you can see I was reversing a little bit, running a little bit. We're in 10 contracts. Let's watch out for price drives aggressively to that level. So you can take off 2 contracts there. 3. Boom. Look at that aggressive push lower. At this point, to me, price is pretty much potentially done doing what it's doing. It could keep dropping lower. So those levels outlined on the 1 hour chart. But at this point, I just want to be at least a break even or put my stop loss in a level where I don't think price should retrace back to. You see, I'm moving my stop loss a little higher because I knew price could trade this 5 minute fair value gap here. So I just moved it above the supported block right here. So beautiful trade. This right here. Again, it's a beautiful trade from this level, 19,434, all the way down to 19,323. That's like 120 points. Plus the 90 points we accumulated on the buy side. So this is good for a day. We're looking at 200 plus points for the day on NASDAQ. At this point, price is just playing around. This 5-minute fair value gap. See how price is struggling to get above that level. But now I just don't care about the trade. It is what it is, right? Like I've already gotten what I wanted. And then one thing that we want to pay attention to, call out here, is that S&P still failed to run out previous day's lows. So at this moment, I don't mind holding to already close out with most of my position, but I already know like there's a strong likelihood price can just start turning around. And maybe those lows get targeted tomorrow. That's kind of how I look at price here. So at this point, we finally traded above that 5-minute fair value gap. So I just got to trade because once that happens, it's an indication it's likely to keep going higher. And you can see my positions here. So you see again those buys, boom, boom, get out of here, and then I tried to buy here like retail, got out right away, and you see me sell. Well, you see me selling here for 10 contracts. Look at that beautiful fair value gap on 30-second chart. This is what I was watching on lower time frame, 30-second chart. Boom, trades back here. This could be a sell right here. Boom, here another sell. Look how prices drops. This beautiful, beautiful, beautiful day where we take the buys, take sell. All we do is work and literally this price in here. Price opens right here, drops lower. Retail chases that. The price goes higher. Retail chases the highs. And the price goes back lower. So if you got wrecked this day, sorry, but like it is kind of funny. You gotta really think, what is the average person thinking? What are they going to do? I'm constantly thinking about it, that I'm looking at from a smart money concept level. What is that? Is there any signature seeing in price? Paying very close attention to what's happening above opening price. When price is below, this is a very simple concept here. You got to think about it. Price is below opening price. You want to see it as cheap or a discount, where smart money might consider buying. Not every time, but when the context exists, like in this case where we drop lower, taking out previous day's low, S&P's failing to do so. Market has dropped lower all day long. Everyone's gonna chase it slower. Start seeing buys come in. Boom, that's taken out. Now what happens? S&P gave us signs because it kept on running higher to take out its intraday highs. NASDAQ was showing weakness. It did not want to go higher at all. Didn't want to go higher. It showed you that. And then if you're patient enough, you can see price. Yes, it goes, high. This high takes this high out. This high takes this out. So it's taking liquidity up here, respecting this 15-minute fair value gap level or inversion fair value gap. Remember, these two orange lines here. Respecting that. It's dancing right above 9:30 opening. So now we're above this opening price. We can start looking at this as, okay, maybe price is not expensive. We've taken out liquidity. We felt to go much higher. We're dancing, accumulating around here. And we start seeing price create a fair value gap here, drop. That could be a first entry. If not, really as it drops lower below 9:30 opening, this could be a really solid entry with a stop loss above here. And clean wash to take out this range here or this low. So beautiful, beautiful trading day. And I mean, if you got some value from this, you want me to keep on breaking down videos, please like, subscribe, drop a comment, man. It is something I'll keep on dropping videos on the trades I'm taking here. But this is a very, very, I'll call it an easy day with a little bit of range. Looking forward to seeing how tomorrow plays out. We also have to pay attention to the fact that I think interest rates are potentially going to get cut next week. So it's probably going to be a lot of money on the sidelines as well. So I want to pay attention to that, and that might cause a little consolidation, a little back and forth until those interest rate announcements actually come out. So hopefully this was helpful and just insightful. Please like, subscribe, follow the channel, join my free Telegram channel. The link should be below. Thanks for watching. Have a wonderful night. Let's go kill it tomorrow.